As cracks emerge in this tech trade, our next guest says there are a number of stocks that could be about to break. Robert Sluymer, Fundstrat Global Advisors, over at the Plaza with 2 names to sell and 1 to buy. Rob, what are you looking at?
Great, thanks, Melissa. I think we really want to step back and think about the market cycle. When I think of market cycles, think about the low we had in 2016. It's very consistent with a 4-year cycle low, and those go all the way back in time. So as we start to see this leadership fraying in various areas of the market, Dan was just talking about the semiconductors starting to peak out in the beginning of the year. Tech has really been the one area that's held up really, really well. We've got these big uptrends pretty much in place and still right on the line there, just trying to hold in. But what's critical, what I think is really important here, is that this relative performance is beginning to wane a little bit. In fact, just recently, we had this relative strength just starting to make a new multi-week low. So you want to keep a really close eye on that. There's a lot of positioning here. There's a lot of crowded trades in a lot of the software and IT names, but you are seeing fraying. So when we look at a couple of names that already had quite a bit of damage, and I think are probably setting up for a trading bounce, but I think you want to sell into that strength. And the reason for that is when we look at these very long-term trends, say on Facebook, you know, these things are breaking these uptrends. That's a 20% decline right in, whoops, that's not working out too well. That's a 20% decline. Try it one more time. That's a 20% decline where we had the break, and now it's down another 30%. So these are trend breaks in these stocks. And when we look at the relative performance, it's already taken out that low that we had at the beginning of 2018. So I think the key point here is that we're starting to see a lot more fraying in some of the former leaders and the ones that have broken down. If you get strength in these names, you want to be cutting back. Again, if we look at Micron, another name, huge uptrend, but these trends are beginning to break on the stock, and I think you want to be using strength. The market's very good at discounting where we're getting that fraying leadership. And here again, that relative performance is already taking out the lows that you had at the beginning of, or the end of 2018. So what do? I think the comment has been and continues to be, you want to be diversifying portfolios away from that concentrated leadership. You don't have to sell everything. We want to be diversifying away to some areas that haven't participated during the market cycle through 2016. Now, it's a little bit of a forgotten name, but Walgreen Boots really hasn't done anything for most of this market cycle. It's been very weak. That relative strength actually is starting to turn. And when we look at the price, again, we've had almost a 2-year bear market, and what I think is terrific about this, it's come back into this massive base. So as a diversifier, similar to what we saw with a name like Disney, you have these stocks that have been doing nothing for 2 years that are now starting to emerge. That's where you want to put new capital.
All right, Rob, come on over. Stephanie will bring the chair in.
It's a vote thing. I mean, just so we get it, can we establish we no longer vote on this,
We established that, and that's why I don't ask you anymore.
No, the Fundstrat people have a free pass.
Free pass.
Free pass for Fundstrat.
You always say no anyhow, Guy.
I would have said no, but I'm kidding.
Okay, so the one stock that you recommended to buy was Walgreens Boots Alliance.
Yes.
Does tech overall look terrible?
I wouldn't say that. I think there's a lot of names where we could have gone back in time and look at the software names, Adobe, CRM, some of the mid-cap software names. They've been big, big leaders. You could have said they were stretched for the last 2 years. Now, they don't look like new timely buys to me, but as you work through the various industry groups, you see the semis rolling over. Now, many of these have come down a long way. Applied Materials broke at the beginning of 18, and it's already down to levels where I think you got to be actually careful on the short side. I don't think they're buys, but they've come down so far, you can get a short squeeze very quickly. So I wouldn't say the entire sector looks terrible, but I think incrementally we're seeing fraying, and you want to be diversifying away.
You brought up a Micron chart. Micron basically started the year, it's a $40 stock, late January, early February. We've round-tripped it now. Here we are again. Is there a chance we put in somewhat of a double bottom here in MU, and then it gives us an opportunity?
Possible. We went from, what, 60 down to 40 and change, maybe 50 bucks. And it's very oversold on a short-term basis. So you come into earnings, there's a lot of negativity, you get bounces on these stocks, but I think it's part of a bigger cyclical peak. When we think about the broader market cycle, you know, semis are part of that sort of economically sensitive area, and I think these are bigger tops that are developing. When we get into 2019, I think we want to be looking more at value names and names that haven't been leading the market for the last 2 years.
So I want to go back to Facebook, because I look at the chart, to my eye, 150 seems like really good support, right?
100%.
So are you saying to sell the rallies and it's going to break through 150? Is that what you're thinking?
Ultimately.
Okay.
And I think when you see these big gaps in growth stocks that have been held by so many people, it generally takes a minimum of 1 to 2 quarters before any of the growth managers are going to come back and buy that stock. It's going to have to put up very strong earnings for the guys that chase and make trends to come back into the name. So I'd stay on the sidelines. I think it's dead money.
It's been a rough few weeks for investors in general, Rob. So when you take a look at the market action, is there anything that causes you to say that there has been damage done technically to any parts of the market because of the volatility in the past few weeks?
Yes, there's definitely been damage. We've got all kinds of stocks or all kinds of groups that have rallied back to their 2018 highs. The industrials are a good example of that. I think in the very short term, we want to be just a little cautious, getting overly negative. The short-term data is getting very oversold at current levels. We're down 7% or so. And I think we're going to put in a trading bounce. We're coming into earnings. I think you get a bit of a recovery. Again, I think the bigger risk is as you move into 2019.
Okay. Rob, thank you.
Thank you.
Rob Sluymer of Fundstrat. How are you feeling about Facebook these days, Karen?
A little nervous, but,
Yeah.
you know, we'll see. I think it's October 31, I think they're going to report. And the bar's been lowered quite a bit. I'm a little nervous, but I am definitely hanging on until earnings.